Crypto Cats. My name is Tom. I'm the crypto investor. And it's time for the weekly market roundup, if we must. I mean, to be honest, I wouldn't bother go outside, touch some grass. Um, it's ugly. Ethereum is down 32% at 1,200. Bitcoin was holding up okay until Sunday night, and then also has dropped 25% in the last week at 22,000 now. To be honest, everything else much the same. Even like surprisingly, things like Cardano are holding up better than Ethereum. I guess there's huge amounts that are staked within that, and a lot of the selling we're seeing is actually coming from institutional exposure. Companies like Celsius, of course, freezing their assets of their customers. Many big players being forced into liquidation, and those big players are more likely to be holding the blue chips, so they're actually getting hit harder than the other alternative L1s and such. Yeah. So anyway, let's jump into it. Um, the primary catalyst, so the selling really started to accelerate last week. On Friday, we got the inflation print. So consumer price index inflation, how much your stuff costs, from your food to your petrol. Obviously, we have seen inflation rocketing up, and we got the anticipated read was 8.3%, and we got 8.6%, which scares the market more. It means that the Fed, which will be making its decision on Friday about interest rates, has its hand forced to put interest rates up higher. And if interest rates are up higher, then it's more incentive to put your money into fixed interest, and businesses have less cheap money to grow, and growth stocks become less desirable, and the growth stocks effectively on steroid is crypto. We've seen that Nasdaq and crypto are completely correlated, and we'll see. Actually, we'll have a look at that in a minute. And yeah, this is belief. And listening to Stanley Drunken Miller earlier today, who is one of the best macro investors out there, he was saying that historically, when CPI print has come in over 5%, the Fed has had to raise interest rates to more than that inflation print in order to curb inflation. I can't begin to, I think, this is a rule that probably has to be broken, because it's hard to imagine interest rates getting as high as 8.6%. If interest rates go as high as 5%, you could see 30% of the businesses in the world go bankrupt. There is so much debt out there that it's almost impossible for that level of interest to be accommodated into the economy. Maybe that's what we have. Maybe the tide goes out that dramatically, and we have a huge 1930s style economic nuclear bomb. But either way, we're not getting a soft landing. Inflation hasn't been transitory, and we are feeling the pain significantly. And Drunken Miller is not optimistic that this is basically the consensus is a recession is pretty much inevitable. Be that probably that clocks in, it's a lagging indicator that probably clocks in 2023 or so. Anyway, on the back of this, of course, just now today we've seen Coinbase is saying they're laying off 18% of their workforce. We were talking about this last week. More and more companies are being forced to hunker down for the winter, to make sure that their capital is going to last as long as possible. And so they're sucking in their overheads. Coinbase got $6 billion in cash reserves, and they're doing the right thing, really. It's brutal, but they have to do this. But the big news this week, and what really caused the kind of waterfall selling of crypto markets on Sunday night, Monday morning, was Celsius. And I hope I said it to you. I've said it to a few people in the Discord community. I've been blowing the whistle on this for a while, that Celsius, and I got my wife to move her assets out of it, that Celsius may freeze withdrawals. And they did. And this has obviously spooked the market significantly. And Celsius are pretty huge in this space. And there are even like pension companies who have invested $400 million with Celsius. They are a big player. And so this leads to contagion to the broader market. We've got Peter McCormack saying shitcoin gogs. The question obviously is what will happen when they do eventually open up their withdrawals. The problem that Celsius have got is that they had so much money in staked ETH with Lido, which is illiquid, and there was a rush of withdrawals from their platform, and they couldn't honor it, and they had to start selling staked ETH at a loss. Uh, and yeah, they don't have the liquidity, even though they may have the assets to back it. They don't have enough liquid assets to back it. So we saw so staked ETH was then becoming cheaper than ETH, even though these are both worth one Ethereum. One is liquid, one is not. Um, if you're not familiar, this is if you want to add your crypto to the beacon chain effectively and earn that yield on your Ethereum. Lido and Rocket Pool allow you to do this. So you could right now, I need to check it in a minute, but there's a 5% disparity. I personally bought some. This is not the same as UST losing its peg. This is the fact that staked Ethereum, people want liquidity now, so they're happy to pay a loss effectively to liquidate it now on the secondary market. So staked ETH is cheaper, 5% or so. But once the beacon chain goes live, once we do get the merge, we will see parity again. It's not the same. They do have the Ethereum to back it up. All right. All my pages need to learn. I recorded this for you on Sunday night twice. Both times it failed. I'm recording it again now on Tuesday. Now I've had the time to do it. If you do appreciate me doing so, please press the like button. Please do comment and let me know. This may well be the last video, unfortunately, I can do for some time. I may have an interesting TV gig in the survival space that will take me away from this for some time. But I don't want to be that guy who just abandons people as soon as it gets difficult. And I recognize that the bear market is where we make money. This could be a long, sustained bear market depending on the macro environment. We could be looking at dollar cost averaging into these assets for another 2 years, but it will come back. Quality will prevail, and I still believe Ethereum will be the most secure and decentralized settlement there that the world can use. And if the likes of countries wish to, if we want to have consensus of where we put the stock market on the blockchain, no one's going to say, America, we want to use your blockchain. We're going to say, okay, well, let's settle on the most secure, decentralized one that we can all agree on. And so we will look at L2 rollups on top of Ethereum for this. And Norway are looking at Ethereum for their central bank digital currency. This will happen. We are just irritatingly early still. Anyway, this is what I was saying about with Celsius. This tweet I had ready to talk about this, and then now Celsius has gone and closed withdrawal. So I was basically trying to blow the whistle on that for you. Okay, so anyway, Ethereum had a successful merge. We saw, so merging Ethereum is like launching a rocket into space. They are testing it on mirrors of the mainnet. So you have Ropsten, and then I can't remember the names of the other two, and nor do I really care what their names are, but they successfully did so on Ropsten without hitch. There were a few minor things, but really it was very good. And so that was great to see. I was expecting ETH to actually have a very good week. Anyway, we're a step closer to the merge, and as far as the odds of that merge, the poly markets allow you to people to effectively bet on this, and the probabilities that we have at the moment I think are more bearish than they should be, but 28% chance we get it by September 1st, 65% chance that we see it on October 1st, so probability is we see it in September, could be before. And then end of year, we're saying it's a 90% chance that we do see the merge. So the only way it's not going to happen, like we're accounting for 2, 3, 4 bugs to be found. If there's 6, 7, 8, 9 bugs found between now and then, which seems unlikely considering test mergers are going successfully, then it would be deferred until 2023. But it's looking on course. It's hard to stay excited though, isn't it, when he's down at 1,200? But 38 grand to buy yourself a validator, 32 Ethereum to run a node. It's a long-term money beacon that your family in the future will be extremely grateful for if you do it. It's just hard to be infused when everything is shit. All right, so what have we got next? This is interesting. The world consumes 25,000 terawatts of electricity 204 of that, which is 0.82%, is Bitcoin. So nearly 1% of all the world's electricity is consumed by Bitcoin. 0.34% of that is Ethereum. Once the merge happens, this will go down to 0.000001%, and then the rhetoric may change to what the fuck, how can Bitcoin really use this much of our world's electricity, particularly with the concerns of global warming, and now we have the costs of energy so expensive. We'll see. It's going to be a hard rhetoric to support. I know that there are different ways that you can look at this, like it encourages overbuilding of solar plants and wind and other renewable energy sources. But yeah, that's, I think, quite extraordinary, to be honest. This landmark legislation bill is looking good to go through in 2024, so not that soon. But one of the things in this bill that's quite interesting is that your staked assets will not be taxable unless you withdraw them. So let's say you stake your Ethereum and you earn 12% per year. You can allow that to keep on compounding without paying tax on it. That's called gross roll-up. Means the asset continue to grow without the taxable event each year. Then you pay tax on the final bit. So you get that compounding effect of gross roll-up. There was something else in this report I wanted to tell you. Can't remember what it was. PayPal is supporting transfer of crypto between themselves, people internally, and external wallets. That's great. It's only a matter of time until people say, well, I also want you to pay me 7-10% yield on my Ethereum for keeping it there. This is good. This is what consumers want. Revolut don't offer this, for example. It's only a matter of time until Revolut do provide such things. This was on Sunday. This is going to be a lot worse now. This is showing that El Salvador, MicroStrategy, Tesla, and Block Holdings are X amount underwater on their Bitcoin position. So MicroStrategies are now, I think it's now $1 billion underwater on their position of Bitcoin. El Salvador as a country is now, I don't know, 55% down on their position. I haven't seen a buy the dip shouts from, I forgot his name, their president. What's Tom Williams saying? Yes, so of course, Shilling Pocket. Pocket had an amazing week this week. Smashed through 1 billion relays. What was interesting was that ETH came online in such a big way, and we suddenly saw this 800% increase in Ethereum relays to 500 million relays in 24 hours. It has subsequently gone away, but they basically ran a massive stress test on Pocket Network to see if it can accommodate this. And this may have just been a little test comparing for what could be in the future much more. Still looking at like 1 or 2% of ETH relays. So really good to see. Hopefully their test went well. And yeah, it makes me enticed for the future. The infrastructure costs are coming down. We're going to see a bill voted on this week. Inflation is coming down. If it wasn't the fact we're in such a fudging bear market, then I think things would be starting to look good. Oh yeah, they added optimism chain as well. But yeah, we will see. Its price at least hasn't gone down in the last 2 weeks, unlike everything else. So versus Bitcoin and Ethereum, Pocket's looking all right. And wow, I've just checked this. We're now into basically a fire sale for the Bitcoin rainbow charts. This is historically the best time to be buying your Bitcoin. So we're now into that underpriced area. Of course, if we look at what happened from 2015 to 2017, we can stay down here for a long time. And we have to also remember that crypto has never experienced a recession. Our last recession was 2008. And so, yeah, we will see. We could be looking at this. You know, this could happen. We could be down here. But hey, at least if we track this and we don't lose this lower line. Anyway, again, this is slightly outdated. I haven't updated these, but these are some of the biggest names, traders on crypto Twitter, saying Ethereum needs to hit $1,000 before he's interested, or reclaim $2,500. $400 unlikely. Again, very interested. Looking like 1,000 could be possible now. And this chap as well, Capo Crypto, they're very good. He's been right all the time, annoyingly. Goodness, look how outdated this is already from my Sunday video. This was at 30,000. We're now down here. He was saying, look, this is not bullish, and he was right. All right, let's jump into the charts. So why has that got Tron on it? Because I may have been shorting it. I don't believe in what Justin Sun is doing. He seems sketchy, and I can see another Luna on the horizon. Not financial advice. Please don't place a short on Tron on the back of this. All right. Looking at the Nasdaq, you can see that if we go to the weekly chart, we were looking okay, and then suddenly we had a massive rejection. The inflation numbers scared the shit out of everyone, and we closed at the lows of the session. We've since broken down, and we're now really starting to accelerate to the downside. And the Nasdaq and crypto, it's like the dog that wags the tail. They're very, very correlated. I think it's only now an inevitability that we see the Nasdaq come down to this 200-day moving average, which has held a support for the last 10 years. It's not even on my chart when it broke. So, technical analysis is a funny thing, but it's almost self-fulfilling. If you have enough people that believe in it or enough algo bots that believe in something, and the 200-day moving average is that big daddy, and everyone buys into it, then it can act as support. And so I wouldn't be surprised to see the Nasdaq push down here to, which is another 4% from where we're at now. Friday this week, as I said, we get the Fed interest rate decision. The media are pushing 0.75% increase. And the fact they're all pushing that makes me think that we're probably going to get 0.5%. And so they're kind of, what's the expression? Aim for the clouds, land in the stars, or the opposite of that. They're trying to manage expectation that then we actually see a bit of a relief rally if we only get 0.5 interest rate rise. Anyway, really not looking pretty. It feels like the Nasdaq could still continue to fall further from here. Peak to bottom, we are already 33% down for the year, the worst year pretty much in history for the Nasdaq. And the S&P is much the same, but we're not here to look at that. We're looking at crypto, starting with Ethereum. So we lost that critical 1700 line last week, and we have since continued to fall. Now we are at that critical 200-day moving average. We have wicked below it already, but we are holding so far. Be interesting to see if we can get a weekly close holding above this 200-day. Maybe that we hug this now for some time, or things get far worse. And we come back down. You can see that we've lost the previous all-time high, which was at 1400, which many people thought was going to be where we'd find support. And of course, next target really is that psychological $1,000, and then there is some support at 860, also making more like 800. We will see, but either way, it's not really looking very pretty, is it? I just keep on dollar cost averaging. I'm setting aside 20% of my income each month, and I buy ETH, and I'll do that for the next 2-3 years. And I have conviction in this investment, and I will continue to do so. But this time, I will dollar cost average out next time we have a bull market, and that was the big mistake I made on this cycle. Okay, so what we can also do is divide Ethereum by money that's been printed, and you can see that actually in 2007 money, so we know that 40% of all the dollars in history were printed, we're actually looking at Ethereum being valued at $800 right now, based on 2007 money, if that makes sense. So I've divided Ethereum by M2 money. So just to give you that kind of concept. All right, looking at Bitcoin, wow. I mean, these are weekly candles. We closed, well, basically, if we go daily, we have moved very quickly in the last 1 to 4 days. We've seen that 30% move for Bitcoin, bouncing a little bit at the moment. A lot of people have price targets around that 20. So we hit 21,000. There is a lot of buyers waiting for that previous all-time high, 20,000. And often, big buyers aren't stupid. They tend to set their buy orders just above. So we've seen a huge bounce, so far, which is also coinciding with that 200-day moving average. So we're holding at the 200-day moving average at the moment. I don't know. I think it all depends on macro. It all depends on what happens in the broader stock market. But we could go sideways for some time. I've lost my mouse. Brilliant. Where were we? Okay, so yeah, Bitcoin into the abyss. But this, I mean, these historically are great times to be dollar cost averaging, and no one knows exactly where the bottom is, but the risk really is now starting to be more to the upside than the downside. You wouldn't want to be holding a short and slipping into a coma at these prices on Bitcoin. Okay. Looking at the total market cap of crypto, you can see that we continue to fall into the abyss, also holding a 200-day moving average. So I think we're getting close to the point where large money is thinking about deploying, but they're nervous to do so because of that macro environment. Okay, and I don't even want to look at it for the ETH Bitcoin ratio. Oh, actually, a bit of a bounce for the ETH Bitcoin ratio, interestingly enough. I hadn't looked at this prior, but it's in a 10% bounce for ETH versus Bitcoin. So we were holding above this line, we broke, and we have been moving down ever since. It's possible that we do still come down and test this lower trend line, but it's hard to say. Maybe that we, from now we will channel in here until we get a successful merge and then one becomes deflationary. Then I wanted to look at Bitcoin dominance. So Bitcoin dominance, this is what happened. Bitcoin dominance got to this critical level here at 48%, which had acted as resistance 3 times before and has turned around. And it's the first time we've really seen Bitcoin to lose value versus alts in the last 6 weeks or so, and continues to do so somewhat. Looking at ETH dominance, wow, down to 15.8%, quite horrific. And it's also mostly due to how much is in stable coins right now. So this gives us a real handle of like how much people are starting to deploy from stable coins. And if we look at ETH dominance, actually, we're getting a really nice bounce on this trend line, which is where you would hope to see ETH find some stability versus its competitors. So that's pretty good to see. And for me, this, if you're wondering about like switching some Bitcoin to ETH, this seems pretty decent to me, as far as I can see. All right. And as I mentioned, Pocket, I shill it, so I should show it. Obviously, we've had this horrific downward movement due to the high inflation of the token. At least you are still earning 20% of the token every month. But we are starting to perhaps show some floor here. The inflation has dropped significantly, and maybe if the broader market can turn, which I don't feel like it is turning yet, then we'll see some movement. But probably likely that we dawdle down here for quite some time until the new dawn arises in the crypto space. Okay. All right. That's it for now, Crypto Cats. You take care out there. Don't look at this chart. I don't know what you're doing here, to be honest, at this time in the video, but thank you all the same. I'll speak to you soon. All the best.